Every month, I invest 1,000 euros into my community portfolio, and I started the whole thing a year ago, in October 2024, on my German YouTube channel. Since then, there's been a video every month with my latest investments, and whenever I sell stocks, I always make an extra video. And now I'm continuing this whole format at the same time on my new English language YouTube channel, the German Value Investor. So if you want to be part of it, and find out every month which stocks I'm buying for my community portfolio, feel free to subscribe to the channel, turn on the notification bell, and you won't miss any of the upcoming videos. And this monthly video always follows a similar structure. I always start by showing the performance of my community portfolios so far, compared to other indices. After that, I talk about any news related to the stocks in my community portfolio since my last update. And third, I share my purchases. And today, for the first time, we're starting all of this here in October 2025 on the English language channel as well. And if you like this format and want me to continue it on my English language channel month after month, please give the video a like so I know that you're enjoying it and that you're interested. Let's start with the performance so far. Here we see 5 comparison charts. In yellow, right at the bottom, with a performance so far since October 2024 of 15.33%. Then, in second to last place in red, is the S&P 500 with 20.9%. Next comes the German leading index with 25.95% in light blue. Then, in second place, is my community portfolio with 27.55% in black. And in first place is my main portfolio, which I'm including here as a performance comparison, with 36.56%, right at the top in purple. Recently, over the past few weeks, it did go down a bit, but still, it's holding on to first place, with my main portfolio in first and my community portfolio in second in this comparison. I'm very, very satisfied with that so far. But I also want to emphasize that value investing is, of course, a long-term strategy, and there are months and even years when I underperform the overall market. It's also possible that the overall market will overtake me next year. What's important to me here is the long-term risk-reward ratio. I want to take on relatively little risk and have the highest possible chances. Of course, I do occasionally take on higher risks, but when I do, it's with smaller positions. I'll get to that again in my current update in just a moment. But above all, the large positions should, of course, be chosen very, very carefully. And for anyone new to my channel, the main difference with my main portfolio is that my main portfolio often contains very, very small or rather lesser-known companies. Not only that, there are also a few larger ones, but with the smaller companies, you're more likely to find bargains. That's why I've weighted those more heavily there. And in my community portfolio, there are also a few small companies, but mainly larger ones that are more well-known, and those are the ones I share here. It's also important to know that while the community portfolio is only a year old, I've actually been active in the stock market for much longer, over 10 years. I studied mathematics, later became an actuary, wrote my master's thesis on portfolio optimization, and even published a paper on portfolio optimization in the European Journal of Operational Research. So I've been active in the stock market for a very, very long time. As I said, the community portfolio has only existed for a year. Now let's move on to my current portfolio. Worldline, my smallest position and also the one with the highest risk. Unfortunately, the investment case there didn't work out at all. It's now down 62%. Its current weighting is still 1% of my portfolio. Because the weighting was set so low, it doesn't have much of an impact on overall performance. Still, it's obviously annoying, and it also shows that not every investment case works out for me either. And that's not even the goal, because in the end, no one manages to have every investment case work out over the years. So you just have to live with that. Next up is Volkswagen, a cyclical company that I only invested in a few months ago. Here you have the chance that this cycle will eventually turn in the other direction. Currently, compared to the long-term average, the stock price is very, very low. At its peak, the stock was around 350 euros. Now it's just under 100 euros, which is why this is a counter-cyclical opportunity. But of course, the automotive industry is fiercely competitive, which is why I only have a very small position in Volkswagen and will never let this position become very large. Canadian National Railway. Here too, we have a company currently facing some challenges, but thanks to its extensive rail network in Canada, it still has a very strong competitive advantage. I also started with an initial position here just a few months ago. At the moment, I don't consider the company to be very cheap, so it's more of a watch list position for me. And if it continues to drop, I would continue to build up my position. Currently, I'm down 6% here. Alibaba, on the other hand, I bought it when nobody wanted to buy Chinese stocks, at an average price of 81 euros and 42 cents. and I've already sold half of my position. That's why my current position here is still at 758 euros, or a weighting of 6%. And with this position, I'm currently up 86%. And when I sold the first half, I had already sold it at a 43% profit. Then there's Occidental Petroleum, an oil company from the US that, of course, all of you know. Here too, I entered the position more in a contrarian way. Oil prices are currently rather low. Accordingly, so is Occidental's stock price. I bought in at an average price of 41 euros 49. Now the price is at 35 euros, which means I'm down 15%. The weighting here is at 6.64%. And there was recent news about Occidental, because they sold their OxyChem division, meaning their chemical division, for $9.7 billion in cash to Berkshire Hathaway. That is, to Warren Buffett's company, which itself is heavily invested in Occidental. And Occidental also states further down that they want to use about $6.5 billion from the proceeds of this sale to reduce debt, aiming to have less than $15 billion in financial liabilities. And it's also stated again here in the presentation that they want to carry out this debt reduction. And once the debt level is within the target range, they plan to return more money to shareholders, for example through dividends, but also through share buybacks that could follow. And that's why it's important, of course, to take a close look at the financial situation. Here we can see they have $2.3 billion in cash. And at the same time, down here on the liability side, they have long-term financial liabilities of $23.3 billion and short-term ones of another $400 million. So roughly $24 billion in total. If you subtract the $6.5 billion here, we end up roughly in the target range, just a bit above, at $17.5 billion. So maybe as early as next year dividends could be increased and above all, shares could be bought back. Of course, it's also important to ask, what does this sale actually mean? It's mainly this chemicals division. Here, the profit in the second quarter is $160 million, after taxes, mind you. Of course, this profit will then be gone. Last year, it was even higher at $860 million, so on average over $200 million per quarter. But what will also be eliminated, of course, is a portion of the interest payments due to the reduction of debt, which currently still amount to $276 million per quarter. So, quite significant interest payments for the large mountain of debt that Occidental has to pay quarter after quarter. And by reducing the debt, this interest burden can be lowered by about 70 million, so that they only have 200 million in interest payments left. So, the profit of 160 million that is lost is offset by the interest payments that are also eliminated, meaning that, effectively, roughly 100 million in quarterly profit is lost here. If things go better, of course, it could be a bit more, like last year. But this sale does not cause a major drop in profits, because the oil division is significantly larger. Here, they made 600 million in profit in the second quarter alone. In Q1, when oil prices were even higher, it was actually $1.2 billion. So the chemicals division is actually a relatively small part, and in my view, it's absolutely fine to sell it to Berkshire Hathaway for a reasonable price, thereby reducing debt and improving the financial situation. This also has the advantage that, in the future, new loans can be obtained at better rates, meaning lower interest payments overall. So if Occidental, for example, needs to refinance a loan, they will very likely get lower interest rates, because Occidental's creditworthiness is naturally better thanks to the nearly $10 billion they are now receiving. And as I said, Occidental is more of a counter-cyclical investment. We can see here that the current oil price is just over $60. There were times when it was over $100 in 2022, and also in the years after that, when it was often above $80. But there were also times, like in 2017, when the oil price was at $40. So of course, it can keep falling. This drop here, Corona, was a special case, down to $20 or even sometimes lower. I would say that's pretty unlikely to happen again, or rather, if such a severe event were to occur that the oil price crashed that hard again, then the entire stock market would probably crash as well, not just the oil industry. And as already mentioned, Berkshire Hathaway is still heavily invested. Right now, it's one of their largest positions. With a weighting of 4.3%, they hold 264 million shares, or about $11 billion, and that's over a quarter of the entire company. Now let's move on to Accor. I bought Accor at an average price of 52 euros and 52 cents after the stock price dropped sharply. By now, I'm up 11% here. The weighting is just under 8%. I received a small dividend here, and there was also some news. On September 29th, they published a strategy update. Feel free to pause the video and read through it, but essentially, They want to focus on their core business in the future and sell off side businesses. And Actor's core portfolio is mainly everything related to electrical infrastructure and the pipe and conduit business. They now want to review, for example, whether they might possibly sell that part. And shortly after, on October 11th, there was more news. The activist investor Enring took a stake in Actor. We can also see down here that Enring Capital Management has taken a position of 2.5% in Actor, which they have just purchased. And there are at least rumors that they are pushing for the entire company to be sold. The current market capitalization is $2 billion, so it's not a very large company, which means you might even find someone willing to acquire Actor. But as a value investor, that's not really something I would speculate on. That would be nice if someone came along and suddenly paid a 50% premium, and I got a quick, solid return. But if that doesn't happen, I'm still invested because I'm convinced by the current risk-reward ratio. And as we can see here, Actor has risen sharply from 2020 all the way to 2024 by 700% to almost $200, and since then has crashed by about 70%. And right down here at the dashed lines is where I kept buying more. The current price is $70. I kept buying between 57 and 66, and I'm still invested here. Amadeus Fire is a German personnel service provider, a very small one, and again, this is about a counter-cyclical investment. Currently, the industry is doing very, very poorly. The current share price is even well below my average entry price of €71.50. Right now, the price is only €51.90, which means I'm almost 30% down. Or if we take the dividend into account, it's about minus 25%. And as we can clearly see here in the chart since 2016, this is a cyclical company, since the personnel services industry is cyclical. It keeps swinging sharply up and down, here up to €160 in 2020, then down to 70 during the pandemic, then back up to €200 in 2021, and then down again to €76 in 2022. A year later, it didn't even make it back up to €140, and since then, it's just kept going further and further down. By now, the stock price is down to just €50, which is clearly much lower than my entry prices. But since this is a contrarian investment, and I said from the very beginning in my older videos that this is a long-term investment, because I don't know when this sector will enter a new cycle, I'm not worried yet, and I'm staying invested. I just recently made a video about Novo Nordisk. Here too, I took a contrarian approach when I invested. At the moment, it's gone down a bit more, minus 17%. Next is NN Group, an insurance company from the Netherlands. I'm more heavily invested here, and currently I'm already up 40%, or even 47% if you include dividends, since the stock price has risen nicely since then. Then there's Kaspi. I also just recently made a video about this one, so if you want to know more, feel free to check out the video. And in second place, we have Baidu. Here, I'm up 30%. My average purchase price was €82, and now the stock price is over €109. The weighting is at 12%. Back then, I said I bought it because Baidu basically had as much cash and investments as its current market capitalization, so the rest of the operating business was basically thrown in for free. And this operating business generates several billion US every year. And in first place, with a weighting of 17%, we have PayPal. My average entry price was €59. Currently, I'm up almost 6%, with the price at just under €63. I won't say much more about it here, even though there have been some updates. For one thing, just last week I published a video where I used PayPal as an example to show what mistakes many investors make, and I also explained a bit about PayPal. And for another, I'll be doing an update on PayPal soon. So if you want to stay up to date, just check back on my channel soon. And besides the €1,000 I deposited again this month into my community portfolio, I also have €220 from previous months that I haven't invested yet. So today, I actually have €1,220 available. And we'll start with my first additional purchase, which is Occidental Petroleum. We're still in the same price range where I already bought before. Now the price has dropped back a bit to $40. Currently, I have 24 shares and I'm buying 4 more for a total of €141. Just confirm once, and the purchase is complete. I've already talked about the latest news on Occidental earlier. Next up is Actor. Actor has already performed well and is currently trading a bit higher than my previous entry points. I would have liked to buy more at lower prices here. Maybe that will happen again. Maybe the price will drop more sharply. Of course, I can't predict that. But at the current price, I'd still buy a little more, even if not much. Currently, I hold 17 shares and I'm buying 2 more for €121. And here as well, Just click confirm and the purchase is completed. Now let's move on to my third additional purchase. I just recently made a video about Kaspi. I've kept buying in whenever the stock price dropped, and now it's around $75. I'm going to buy some more here. My current position consists of 23 shares. I'm buying 3 more. Just click execute, confirm, and I'm buying for just under 200 euros. And here too the purchase went through. Next, let's move on to a new purchase, and that's Adobe. Of course, all of you know Adobe, and lately the company has been getting hit harder and harder. The stock price has dropped because people are afraid that, due to AI, many of Adobe's functions won't be needed anymore, that fewer and fewer people will use Adobe, that the tasks Adobe used to handle will now be taken over by AI, and as a result, Adobe will be able to sell fewer products, collect less in licensing fees, and so in the future, revenues and profits will decline. But in the long term, Adobe has performed very, very well. Over the past 10 years or so, revenues have risen from $4.4 billion to $23 billion, net profit from $800 million to $7 billion, and so on. At the same time, the company is buying back its own shares, most recently increasing these buybacks after the drop in the stock price. We can see that here in this line. Just compared to last year, the number of shares has decreased by about 15 million. And it's right after this crash that I want to open a position. The stock price recently dropped from $640 by almost 50% to $340. That puts it at the same level as in 2019. Let's take a quick look at that here as well. The market capitalization is still $150 billion, and the PE ratio here is 22. That's not extremely cheap. That's why I'm not building a large position here yet, just a smaller one for now. A few years ago, I got Apple at a PE ratio of 10. I bought Meta in 2022 at a PE of 10. Adobe is still a long way from that, of course, and I'd be happy if it dropped to that level while the core business keeps running and continues to generate cash flow. And then, of course, I would make the position significantly larger. So for now, I'm just buying 2 shares here for a total of 586 euros. Again, just click confirm here, and it was executed. And if you're interested in my detailed analysis of Adobe, which I only published in October this year, feel free to check out this video. And see you next time on German Value Investor.